Well, IndusInd Bank reported Q3 earnings. Loan growth was at 34.7%, which was the best ever. But NII growth has continued to lag loan growth. Abhishek is here with what the brokerages make of the earnings and the asset quality. Abhishek.
Good morning, Ekta. So, as you mentioned, the NII growth has been lagging, and this is for 5 quarters in a row that the NII growth has been lagging the loan growth, or the NII growth is lower than the loan growth. So, what the brokerages are saying is that the loan growth momentum remains really strong, and if you look at the loan growth at 34.7%, it's the best ever loan growth for IndusInd Bank over the last few years. Elevated slippages and decline in provision coverage ratio is a worry. Slippages X of ILNFS is at 806 crore. That compares to about 419 crore in the previous quarter, and despite the fact that slippages increased and they had earnings, the provision coverage ratio actually declined to 48% versus 56% on a sequential basis. The net interest margin has been on a continuously declining trend right from 4% to now about 3.83%, and that is why the brokerages have cut earnings estimate for FY19 by 4 to 6% and FY20 by 2 to 6% on account of the overhang of ILNFS account, wherein they will have to make provision in the next quarter, that is Q4 FY19. So if you look at the brokerages, there has been target price cut by HSBC and IDFC Securities, while largely all the brokerages remain positive on the stock with a buy or outperformance rating. Back to you.
All right, Abhishek, thanks a lot for that. That's as far as IndusInd Bank is concerned, the company that reported its earnings yesterday. But let's focus on the company that will report its earnings today. TCS will be on our radar as it will be reporting its third quarter earnings today. Rima is here with what to expect. Rima.
Well, the numbers should be out post-market hours closer to 5 o'clock. The stock has been a big outperformer. It's rallied close to about 40% in the last 1 year, outperforming the Nifty IT, which rallied close to about 20%. And that's because the company has been reporting good numbers. In fact, it's on track to end FY19 with a double-digit growth. In Q2, its constant currency growth was at 11.5%. This quarter, the momentum will weaken if you look at it quarter on quarter on account of seasonality, year-end furloughs. So we're working with a dollar revenue growth of 1.2%. In constant currency, it should be a growth of 1.7 to 2%, which is lower than the 3.7% growth that it had in Q2. That's on a quarter-on-quarter basis. But if I compare it to last year, then the growth will look better because December quarter of last year had a growth of 1.3%. Margins will be slightly higher by 20 basis points, aided by the rupee depreciation. Rupees depreciated a little more than 2% on an average this quarter. And margins will continue to be within the company's guided band of 26 to 28% for the second consecutive quarter. Profit, according to our poll, should be higher by close to about 3.5%. What the street will watch very closely will be any kind of management commentary on the outlook for calendar year 2019. There are concerns on global macros. It appears to be a lot more uncertain given the trade worries, Brexit. There's a possibility of a US growth slowing down. Accenture, when they came out with their numbers last month, they warned of a volatile macro environment. So that will be closely tracked. And secondly, even on the margin front, because while the rupee has depreciated on an average this quarter end to end, the rupee is now trending close to 70. So there has been an appreciation which could eat into the company's margins in the coming quarters. Back to you.
Okay, all right, Rima, thanks very much for that. But do remember, you can catch the management briefing the press this evening at 5:15 p.m.